Hello traders, the title of the video is a simple trading strategy to avoid stock trading mistakes like a pro. Alright, so you want to know how to avoid a typical stock trading mistakes like a pro. Now this is like a shout out, alright, about a specific stock trading mistake one must avoid. Okay, so without too much blah 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 from my side, very often, because you will see very often swing traders, day traders, we get quickly into trouble because as you can see here, a candlestick bar, a price goes up very fast, and then you have a long candlestick bar like this one here. Right, it's very long candlestick bar, and then one will try with to buy straight away because this is a lot of pips, so to speak. All right, so you miss it, you did not enter the trade at early stage, and then you see that there is a long candlestick bar. So because you did not participate in that move and you want to join that bullish price progression, yes or no? So what usually take place after the price, you see a tall candlestick bar like this, then they will try to buy straight away. So they see, oh, it's going up very fast, I'll buy straight away. So they will buy here like this. But very often when we have a long candlestick bar, all right, so if you buy here, so if you put yourself in the position of those who buy here, all right, so you buy here and then you see that tall candlestick bar, what will you be doing here? You will be taking some profit, or you will be securing your gains, all right? But because a lot of stock traders do not go into the mind of other traders, they will try to buy straight away here at the time when those who bought it here are trying to secure their gain or take some profit. By doing so, they are taken out of the trade fast before the price continue to go up. So I can understand why traders are doing that, but you don't want to get into that trouble, okay? So this is about this tall candlestick bar here. So we have another candlestick bar here. You can see again, this is a long candlestick bar. And again, if you try to buy again at the end of that candlestick bar, if you did not participate in the trade here at the lowest point, and you try to join it at the top, you see what's happening here? Those who bought it before are taking some profit or are securing their gain, and now you see a bearish candlestick bar after that. So very often when we see a long candlestick bar, the following candlestick bar, now this is about 70% of the time, you'll see that the next candlestick bar is more likely to be a bearish candlestick bar. So a lot of stock traders are making that mistake without even knowing, because they are not aware of it. So one day they make the same mistake, another day they repeat the same mistake, another day they repeat the same mistake, but they don't, because they don't review their trade, they are not aware of it. So this is like a shout out. Be aware that when we have a long candlestick bar, the next candlestick bar is more likely to be bearish. Why? The reason is, if you want to buy low, yes or no? So professional will buy after a bearish candlestick bar. Now let me say this again. Professional traders will always buy after a bearish candlestick bar. Ordinary trader will always buy after a bullish candlestick bar. So you want to buy, you want to see a bearish candlestick bar before you buy. So you see here, very often you see here, a bearish candlestick bar, retesting moving at 14. Now we have a bullish candlestick bar. You want to buy like a pro, buy after a bearish candlestick bar, a bearish candlestick bar, after a pullback, all right? Very, very important, all right? So you can see the game that they are playing here, deviation from the moving average 14, return to the moving average 14, deviation from the moving average 14, return to the moving average 14. So whenever we see a moving average going up, that is rising, that is sloping up with a positive slope, all right? If I do a bit of, have you done math before? So if a function is f, all right, is that f? All right, try to draw my chart, and is equal to All right. Oops, I'm doing something else. Hold on, please. The function, all right, x, a linear function. Am I speaking with my beautiful American accent or with my, okay, what? Function f equal ax. It's a linear function. All right. As plus b. Are you following me? Just stay tuned, please. If you don't know what I'm doing here, just watch it. All right, just watch it, please. I will get back to the main topic soon. All right. So this is a linear function. That is f. Okay, hold on. Let me do it like a proper mathematician. F x, this is a function of x equal to ax plus b. If the a is positive, it means that we have a positive slope. If a is negative, we have a negative slope. So when we are talking about positive slope, negative slope, we are talking about the trend line. Is it a trending line supporting a bullish trending line, supporting the price? Yes, it is. Is the moving average 14 rising? Yes. So when a moving average 14 is rising and we see a deviation, price moving away from the moving average 14, if you want to buy, we want it to pull back to the moving average 14. Very simple. That's what the professional do here. Again, moving average 14 is rising, deviation, return to the mean, deviation, return to the mean. And then you need to understand this because when the price starts forming a triangle, so it will be doing deviation, return to the mean, deviation, return to the mean. But if you start forming a triangle, as it is the case here, you need to say to yourself that anything is possible. The triangle means anything is possible. You can break a ball, find a support, and then what we will say, continuation, all right? Or you can break below it and find a resistance. Then we will say it's a reversal. The triangle means anything is possible. So going back to the main topic again one more time to avoid that the video is too long. What I'm talking about here, when we see a long candlestick bar, you want a bearish candlestick bar before buying it. So the trick that I've been talking about before is to highlight the high, okay, the low, all right, and the median line of that tall candlestick bar. Sometimes for swing trading, you see the amount of monthly chart here. After a few months, you see this is a minimum 1, 2, 3, 4, 5 months. Here it is, a pullback to return that median line. Can you see that? Also near the moving 14. See a long candlestick bar, don't buy straight away, be patient, wait for a bearish candlestick bar before buying. Alright, or highlight the high, the low, and the median line of that tall candlestick bar. So now look at the tall, the second one here, we have a high there, and now put the low of that second long candlestick bar, and then I put the median line right there. Oops, somewhere there. So what we are expecting is that when we see a long candlestick bar, we want to see a bearish candlestick bar before we attempt to buy. But the reason why I'm recording this video today is that traders are making this same mistake without even feeling it. All right. So that's not good. All right. You are not even feeling it. So over a year, you are doing the same mistake. You don't even know that you are doing the same mistake. So this is a shout out to alert traders that stop making the same mistake over and over when you see a long candlestick bar or any time frame, even on the hour. It happens sometimes even on the hourly time frame. Hopefully I'll see one example here to show you even on the hourly. You see here, a long candlestick bar like this. Don't buy at the top, all right, because a lot of traders already made their profit. They would be securing again, wait for the pullback before you attempt to buy. All right, it's happening all the time, but it's something that I don't understand, and traders are doing it all the time. The long candlestick bar, is okay. Wait for a pullback. 70% of the time, after a long candlestick bar, we see bearish candlestick bar. 30% of the time, you may see 2 or 3 long candlestick bar, okay, on the go, boom, 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 but, all right. So this is about a simple trading strategy to avoid stock trading mistakes like a pro. So higher the high, the low, and the median line, watch out. If you're on the monthly chart, a higher time frame, wait for the pullback onto the median line, and then implement a top-down trading method. Another thing, if to avoid this typical stock trading mistake, see long candlestick bar, at least wait for the first bearish candlestick bar before attempting to buy. Do not try to buy straight away at the top of the long candlestick bar. Have I brainwashed you today? If I did, then I'm happy. All right, so don't do that mistake. Okay, if you have any question or suggestion, all right, put in a comment section. In due course, I will be recording another video to answer your specific question. All right, happy trading to you all, and speak to you soon. We are the TSTW24 traders, talking about a simple trading strategy to avoid stock trading mistakes like a pro. If you think that the video has been useful to you, truly, honestly, all right, please let us know by giving us the thumbs up. If you think that, Joe, this is a disgusting, okay, video that you ever seen before, all right, please let me know so I may improve my next recording. If you think that this is an essential tutorial, all right, please feel free to share it on Google+, on Twitter, and also on Facebook. Your rating is very important for us and put us under pressure to keep posting quality video. Happy trading to you all, and speak to you soon.